Hi, this is May Walensky with Driving Markets. Okay, let's kick off. I want to talk about overall what the macro fundamental picture is globally in the West, in the US, in the UK, and Europe. What we have is follows. We've got high interest rates and recently higher inflation. Now, whether that inflation is coming down or not is up to interpretation. There is definitely a manipulation on numbers. However, headline numbers, which is what the governments want, the Fed wants, the US Treasury wants, central banks want, what they want is that number to come down to between the 1 and 2 or 2 and 3%, depends on which government we're talking about. Now, inflation is, as they use the word, sticky. They can't seem to get it down fast enough. However, it will stay here over the next 2 to 3 years. And the chances of interest rates coming down in the US or the UK in the first 6 months of 2024 is small. There is an opinion that rates will come down. There is an opinion that rates will come down by March in the UK and by March in the US. That could happen. I'm not a prophet on that, but I don't expect them to come down because I expect inflation to remain static and not move down enough to satisfy the central banks. There are several concerns that are worrying the central banks on both sides of how to look at the economy. On the one hand, they've got solid employment numbers. On the other hand, they've got falling retail sales and a potential of going into a recession with falling GDP, especially in the UK, where GDP is hovering around the 0 to negative mark. As far as Germany is concerned, they've already gone into negative GDP, and Germany is the powerhouse, the massive industrial center as regards Europe. So what you're going to have is you're going to have markets that will move down if and when those economies move into a recession. As far as the US is concerned, markets there are overvalued at the moment and massively overstretched. You've got the NASDAQ, which has been pulled up by the mega seven, the Apples and the Googles and the Amazons and the Teslas. Those have been in the Nvidias, they've been Facebook, they've been pulled up by the mega seven, but the markets are definitely overvalued in the US, not so much in the UK, because the UK 100 and the 250 are more defensive stocks. They're not really aggressive high-tech stocks, but the US has been pulled up by AI and by the tech sector, and the US is due and overdue a major correction. If you were to take out the top seven out of the equation, then the US markets would have fallen significantly. So they're the ones that are holding up the US economy. Now, with Thanksgiving, Black Friday, Cyber Monday, and other aspects, the markets are going to be heavily focused on where are retail sales as a health indicator to the US economy. Now, the problem is that retail sales have been falling off recently because household debt is running at an all-time high, and the consumer is concerned about inflation and about the cost of living, with interest rates having a big impact on car loans, business loans, and personal loans. And the US household is now at a higher rate of debt than ever, and the defaults are going to rise. And when those defaults rise, they're going to impact the regional banks in the US. And there's about 4,600 regional banks in the US that will suffer as a result of household debt rising and defaults rising in the US. So that's what you've got to look at. You've got to look at the household debt, the default rate, regional banks in terms of are they liquid, retail sales, and overall economic activity, and you get a good indication that the markets will be going down. Is there going to be a massive crash? I personally think there is, but that's open to interpretation. I put my neck out on the line. I say, yes, there is going to be a significant crash. However, be aware that that is an opinion and not necessarily a fact. So that's what you've got to look at when looking at macro and fundamentals. Yields on the US 10-year Treasury hit a 2-month low yesterday. However, I expect those to rise up over the next month or so to around about 4.7 on the 10-year US 10-year Treasury yield. You can catch me on Instagram, you can share, you can comment, you can subscribe to my channels, you can buy my books on Amazon. This is May Walensky with Driving Markets. Have a great day.